In this video, we're going to look at a screen where if a stock is able to pass it at 80% or better, it has a likelihood of producing a run of at least 50% or greater. So from the time that it passes this screen, it will run 50% or greater about half the time. Hi everybody, my name is Michael Lamott. I am the founder of ChartYourTrade.com, and our goal is to inspire millions of hardworking people just like you to take advantage of the stock market with videos like this. So let's dive right into this ideal growth stock screen. So what is this ideal growth stock screen? Well, it basically comes straight from this book here. This is my go-to book for a lot of things, but How to Make Money in Stocks by William O'Neill. He did research over all the stocks in history to see what are the common elements of the stocks that made these tremendous moves of 500%, 1,000% or more. And he found that they all have similar characteristics of incredible earnings, incredible sales, high ROE, and a lot of different elements, and we'll go through each of them. And so what this ideal growth stock screen does is you overlay it over any stock, and you could see how close does the stock that you're looking at reflect an ideal growth stock. So that in itself is something that's super powerful. The way that I started doing it, I started doing this years ago, and what I would do is I had some expensive software. I put in the parameters of this ideal growth stock screen, and I would go through every single stock one at a time and see by what percentage does this stock that I'm looking at also pass this ideal growth stock screen. And it was very useful, but it was obviously very labor intensive. It would take me a few hours on a weekend to go through a list of 200 stocks or so. And what I eventually ended up doing, what I did now, is it's built into this scanner that I developed called ChartYourTrade MRI, and you could overlay it automatically on to any of the screens that any of the pre-built screens that we have, and just click a button and pick by what percentage you want these stocks to be filtered by, and it gives you the results. So let's take a closer look at what the ideal growth stock screen is and how you could set it up in any kind of software that you have. There are 17 individual parameters for this screen. I'm going to add a link somewhere up here at the top. I'm not sure which way it's going to pop in, but you could click that link. It's going to take you to a blog post where we have all this laid out for you. You can copy and paste the blog post, like just to take out the scanning criteria, or reference it, or do whatever you want with the blog post, but all the information is there, so just click wherever that little link popped up and you'll be able to still watch the video and also access that blog post. But anyway, let's go through some of the parameters. So the first thing that we're looking at within this ideal growth stock screen is percentage change in latest quarter's earnings per share versus the same quarter the prior year. And we want it to be at least 25% greater. So the reason why we are not just looking at, quarter one versus quarter two versus quarter three, we want to compare Q1 of this year versus Q1 of last year versus Q1 of the year before that, because it's going to eliminate seasonality. So if we're just looking at Q1, Q2, Q3, then could be a lot of lulls depending on what industry group that you're looking at, and the percentage change that way could end up reflecting something that's just seasonality. What we're really interested in is growth over time and taking out that seasonality. So if Christmas was great, we want to know how Christmas this year was versus last year. and other things like that, regardless of whatever the industry is. Lots of different industries have different conferences and events and other things that are going on. This is a great comparison for any of those, and that's why we want to look at it that way. So that's number one. 16 more to go. Number two, percentage change in fiscal year EPS versus the prior year last reported, and we want to see percentage change that's greater than 0. So this is going to again show that annual growth. Next up, percentage change in fiscal year EPS prior year versus 1 year ago is also greater than 0. So we're looking at over time, is earnings growing? So a lot of these have to do with earnings, and we want earnings to be extremely strong. That when we're looking for growth, that it just makes sense. Percentage change increase in next quarter's EPS estimate from the same quarter prior year, having the actual EPS be at least 15% or greater. Okay, so we want the estimates for future years and future quarters to be at least 15% or greater. So what are the analysts saying? And we're looking at it. It's a less important factor, but it's still a factor. So we want to keep that in, and an ideal growth stock will have all of these. Just to not to go off on too much of a tangent, but there practically is no ideal growth stock, and that's the reason why we want to look at which stocks can pass this with the greatest percentage and filter out the ones that don't pass it by greater than X percentage. Get into that a little later on. So let's see, where are we? Number 5. Earnings per share have been accelerating over the latest 3 quarters. So we want to see quarterly growth, and we want to see that quarterly growth continuing to grow. And we're looking at it the same way that we are with the percentage changes. This quarter 1 versus quarter 1 of last year. We want the annual percentage of EPS growth rate to be at least 25% greater than the prior year. Very strict screen. Not a lot of stocks pass this. Probably about less than 0.1% of stocks are going to pass this. So when set to 80%, we're going to see that normally around 3 or 4 stocks pass this ideal growth stock screen when set to 80% out of the entire market. So that's pretty strict. Number 7, percentage change latest quarter's sales versus the same quarter prior year is greater than 25%. So the same kind of parameters that we were looking at for earnings also is going to apply to sales. Now we start to get into the company's sector rank. And I'm skipping around a little bit because a lot of it's redundant. And again, you could go and click that blog post and read each of these. But the company's sector rank is very important too. We want the company's sector to be currently within the top third or better of all sectors. So stocks within leading sectors tend to outperform. The tide tends to lift all ships, and the ships that are moving the fastest are the ones that we want to look at. So just another parameter. It doesn't mean that stock in a sector that is underperforming can't go. It just means that the ideal growth will also have stocks that are within the top sectors. We want the market cap to be 500 million or greater. Something else that just history. Percentage of the number of mutual funds owning for the current quarter is greater than the previous quarter. So increasing institutional fund ownership, that's where the demand is coming from. So we want to see increasing fund ownership quarter after quarter, and it's the reason why it's quarter over quarter versus month over month is that's when you tend to see greater changes quarter over quarter, and it's reported more frequently and accurately quarter over quarter. So that's why we're looking at quarter over quarter versus month to month changes. We want management to have at least a 5% stake in the company, so they're going to own 5% of the shares or more. That tends to align management with shareholders. So that's a good thing to have baked in there as well. The current price to be at least $15 or greater. And the reason why we have that as a parameter is because a lot of these institutions can only begin trading stocks when they achieve a certain price level, and that threshold is typically $15. Again, doesn't mean that stocks under $15 can't have these amazing moves, but according to what we got in here, we're sticking with that $15, and it's just one parameter. So if a stock doesn't meet that threshold, but it meets everything else, it's not going to be eliminated. And that's one of the powers of this, to say, okay, give me everything that passes by 80%, and then if it doesn't meet 15, then it's not going to weed it out. We want the current price in relation to its 52-week high to be no greater than less than 15%, so that we don't want it to be less than 15% off of its high. So stocks that are continuing to trend higher than consolidate, we want to try to capture those. We're not looking for stocks that are in a downtrend near its 52-week lows. We want stocks that are continuously making new highs. The way that a $10 stock gets to $100 is by getting to 11, then 12, then 13, then 20, and so on and so forth. We want the current 50-day average volume to be over 100,000, and the reason why it's over 100,000, typically, according to this, he's looking more for stocks that are over 400,000, but the reason why I put 100,000 instead of 400 is because there's some stocks that are very expensive. Like the example that I recall is Intuitive Surgical, that had a very low average volume, like somewhere in, say, 150 shares average volume traded per day. Now it was still had a very high valuation, and it didn't have the average volume, and so I wouldn't want a stock like an Intuitive Surgical from a couple of years ago, and even today it's doing fantastic. I wouldn't want that kind of a stock to be weeded out based on this. So that's why I set the threshold to 100,000. Pre-tax annual margins should be at least 18% or greater, and the ROE of the latest fiscal year reported should be at least 17% or greater. That's your 17 parameters. That's really predominantly, aside from that average trading volume to be at least 100,000 versus 400,000. It all comes straight from here. So again, it really is a fantastic book, and I recommend everyone give it a read at least once. So let's take a look at this ideal growth stock screen and see it in action. We'll be using the ChartYourTrade MRI scanning software for this exercise. So let's take a look. Okay, so let's pop open our ChartYourTrade MRI stock scanner and see what we get. Just gonna go over here, MRI stock scanner, wait for it to load. And here we are. Okay, so what the scanner lets us do is we could run 8 predefined scans, or we could run those scans all together, and then we can overlay this ideal growth stock screen and set it to any increment of 10, from 10% all the way up to 100%. Nothing passes by 100%. I've never seen anything pass by 100%. I have seen something pass by 90. We don't have anything passing by 90 right now. So let's drop it down to 80. And at 80%, we have 3 stocks passing. Now, I did research in 2016. I'm looking very forward to doing the research for the year 2017 to see if it does work out the same way. But anything that passed in 2016 at 80% or greater did have a significant run from the time that passed the scan. So half of them made a run of at least 50% or greater, and that's just a phenomenal hit rate, right? So you're only getting just a handful of stocks every time that you run the scan. So some weeks you'll get the same stocks passing, some weeks you'll get the stocks passing, but from the time that they pass the scan, and if they do run, half of them made a run of at least 50% from passing the scan to their ultimate peak. So to have a 50% run in there or greater is really phenomenal, and something that I'm excited about. So we have these 3 stocks here. Each of them have been on the scan for a little while. BMA is actually relatively new to passing 80% or greater. It kind of fluctuates. I have actually a working order in for this one. What I see here is a descending trend line, and it's really tightening up over here. You can see the volume drying up, and if it breaks above the descending trend line, I would look to take an entry. And if you've seen in some of our other videos, I really love when you get this nice tight action, especially over several weeks or several months, and you just see it tightening up, because what I would look to do would be to enter right above this week's high. At this point, the order's in. If you're watching this video, a few weeks, few months, a year or so from now, we'll see if it ever does break out. But for right now, I'm looking at it to break above 118.25, above last week's high, and then using right around here, so 114.25 as where I would look to be stopped out. Right, so pretty tight entry and exit point that allows me to leverage my position. So on a daily chart, let's just look at this one on the daily. You can see a little easier just how it's tightening up over here, and how you would have support right around here if it does break out. Again, that's a big if, and if it does break out, then you would look at this level over here to be support. And that's something else that's been on this for a very long time, way back here, and it's just provided this incredible run. It's been getting support at this moving average here. It's a 9-week moving average, and it's consistently gotten support, and it too is consolidating over here, starting to tighten up. Yeah, I think that it could be ready in another week or two, just from the looks of that. And then GGAL, another one that's been on the radar for quite a bit. I recall it being back here. I'm not sure if it was passing at 80% back here, but I do remember seeing this stock for quite a long time. Most recently, where I caught it most recently was right around over here when it was forming this. Let's pull this up on the daily chart, And yeah, we had this descending trend line, nice little double bottom there. And it's a very short double bottom, so this is a whole nother conversation. But there's all these different types of patterns of price action, and typically we want a consolidation to be anywhere from 4 weeks at the very shortest to 7 weeks for most patterns, and much longer than that. For a double bottom, typically we're looking at 7 weeks or greater. This was, just to flip back to the weekly chart, 1, 2, 3, 4, and then it broke out on the 5th week. So for a double bottom, kind of short, but it still has the look of the double bottom, and it worked. That's the most important thing, right? So broke out there. Another chance to get in on this shakeout, and then it's been off to the races since. And this stuff tends to work better with the market environment that you're in. So we've been in this strong bull market, and it gives us the opportunity to see this work. But all the price action, that's what's going to tell you, should I get in or should I hold off? And the market will tell you. The stock's price action will tell you, and the consolidations will tell you when to get in, or when to try out a pattern. So just because something happens to pass this at 80% doesn't mean, okay, I'm going to dive in today. You need to wait for these things to set up. It's all about patience and patiently stalking your prey being these great stocks. And what this is telling you is that these are the creme de la creme of the market based on everything that we've seen historically. So that's why we want to focus on these kinds of stocks. Now, you can go and you can run it by, say, 50%, get a lot more different types of stocks passing, but we won't go through all that here. You could go through it on your own. Take a trial. Well, we have a coupon code $1 scan, and I'll link it up here again, and you could just go and click that and take the trial and try it out for yourself. But you could also, one other thing before we cut out, I want to say that you could take all the parameters that we have and you could set it up yourself too. You could, now, whatever kind of scanning software you have, if you're able to set up a checklist, just take all those things and create a checklist, and then see by what percentage the stock that you're looking at is passing these parameters, and it'll be super helpful for you. It will be time consuming. There will be a lot of manual labor involved, but the learning process of actually doing it and the results that it's going to give you will be phenomenal. What the scanner does, it just saves you time. So you saw how quickly we were able to run all this, and I would much rather spend my time analyzing the stocks versus doing manual labor. So that's really the purpose of the ChartYourTrade MRI scanner. So that's it. Thank you all so much for watching. I truly, truly appreciate it. If you have any questions at all, please leave them in the comment section below and I will personally help you. Also, if you like the video, give it a little thumbs up. That really helps us out a lot. And also make sure that you're subscribing to the channel so that way you're going to get all of our updates. Thanks again for watching, and I'll see you again in the next video. Take care. Have a great day.